And a Good Samaritan trying to stop two alleged thieves at a TJ Maxx in Mira Loma. Dramatic video captured by a customer showing the takedown at the location on Limonite Avenue.
Hey guys, welcome back to Andrew Invest. If you're anything like me, you've probably seen quite a few of these shoplifting videos doing the rounds recently. And with retailers having their big earnings week next week, I wanted to explore whether this phenomenon is going to affect their margins and their earnings. In addition, Thursday is going to be a really big day for my own personal portfolio because Alibaba is reporting and it is one of my biggest holdings. I think it will be really interesting to see whether the Chinese economy has recovered and Alibaba has profited off of that. I think there are some clues as to what the earnings will be like, and I want to explore that today as well. Finally, there have been some reports that there could be a debt ceiling deal in the works, and I think the markets would take that extremely well. So let's take a little bit of time to discuss that too. Let's start off by talking about the shoplifting problem. So in recent times, probably since around the COVID era, we've seen a trend of one, organized crime taking stock from shops and reselling it. This is really common in stores like Ulta Beauty, Target, things like that. But also there's a trend of people just walking straight into a shop, grabbing stuff and just walking straight out without even being stopped. So there's multiple explanations for this. On the left, you would probably see the reason being that inflation being so high has caused people to not be able to afford their cost of living, and it just means that they are forced to go in and take the stuff that they need. Whereas on the right, you would see the blame placed at the foot of laws being changed to prevent prosecutions of people stealing under a certain amount of goods. I think it's around $1,000. Ultimately, though, it's not a victimless crime because stores like Walmart are already closing some of their most unprofitable stores in areas where shoplifting rates are high, and that means that customers who live in that area will be forced to go to stores that charge more for their products, and ultimately may even drive the rate of shoplifting to be even higher and cause a vicious cycle. Here we can see the Walmart CEO talk about some of the issues surrounding shoplifting.
Theft is an issue. It's higher than what it's historically been, and we've got safety measures, security measures that we put in place by store location. I think local law enforcement being staffed and being a good partner is part of that equation, and that's normally how we approach it.
But there have been rules that have been changed that make it not something that the police are going to prosecute, or that the criminals won't be prosecuted below certain levels. Does that matter?
If that's not corrected over time, prices will be higher. Right. And or stores will close.
This article speaks about Walmart's withdrawal from Chicago, and it says here, these stores lose tens of millions of dollars a year, and their annual losses nearly doubled in just the last 5 years, Walmart said. Despite years of different strategies, the company said it did not see a route to profitability for these stores. Walmart, which made $20.6 billion in 2022, did not specify why losses were growing in Chicago. Based on the interview that we just watched with the CEO, I think it's pretty clear that it's because of shoplifting. Target lost around $600 million worth of inventory to either employee theft or organized crime theft. And it's a problem that the company is taking seriously, considering it's 3.5% of the company's total revenue, not even profit. And what they're doing is investing in anti-theft training for staff to recognize when a theft is taking place or someone is doing it, and also those protective measures you might have seen in some American grocery stores, like the glass casings for toothpaste, sun cream, all these other things. As someone from the UK, I found it very strange and confusing as to why toothpaste was being locked up, but it seems to be enough of a problem in the US that it is happening. It also seems like authorities are taking the act a little bit more seriously. We can see here that California authorities have been arresting different crime gangs. And also we can see there are a lot of creative measures taking place to ensure that theft is not worth it. This one is kind of interesting. At Home Depot, certain power tools won't work if they're stolen from store shelves. At drugstores, hot products are getting locked up to deter theft, like we mentioned previously. And in some cases, stores are implementing controversial facial recognition technology to scan and store shoppers' faces. There have been some recent news articles, especially from the Walgreens CEO, that inventory shrinkage and theft has started to slow down a bit in January. But it remains to be seen whether that trend has continued up until now. Certainly, if social media is correct, it definitely hasn't. But I think it will be really interesting to pay attention to the earnings reports of all the various retailers that are reporting this coming week and monitor whether the issue has slowed down or has been getting worse. Now let's talk about Alibaba. So Alibaba is reporting on Thursday. Since I did my last video on them where I bought a few more shares, they're down around 12% in the last month or so. So not that amazing performance, but hopefully earnings on Thursday can change that. We'll see. I think that investors are mostly worried about the pace of the Chinese recovery not being as much as what they had been expecting. And there are some signs that that's the case. However, there has been a potential silver lining in the clouds that happened as of last week. JD.com, one of their main competitors, reported earnings, and they actually beat earnings by a decent amount. So maybe Alibaba can be the same. China's GDP rebounded to around a 4.5% growth rate in Q1 2023, so that's pretty impressive, and you would expect consumer spending to recover as well. But a lot of Western companies have been reporting that that is not necessarily the case, the most high profile of which is Estee Lauder. Estee Lauder is a beauty products company that reported earnings earlier in the month. They do a large amount of business in Asia, and their share price fell significantly due to a lower revenue from Asia than what was expected. We can also see here the overall expectation was following the reopening, the China market was going to bounce back, the Qualcomm chief executive said. So there are many Western companies reporting not great signs from Asia. Some companies do appear to be reporting decent sales increases in China, but those do appear to be limited to more luxury orientated companies for now, such as Louis Vuitton Group. I also took some time to look at the JD.com earnings since Alibaba increased in share price a decent amount after they reported, although that did reverse the day afterwards. And what I saw wasn't the most encouraging. So JD beat revenue and earnings expectation, but it looks like it was because of service revenues. So net product revenues decreased by 4.3%. That's sales of different items, while net service revenues increased by 34.5% for the first quarter of 2023. So I think Alibaba derives most of its revenue from product revenues, so I would imagine it might be similar. The trend may be the same for Alibaba as well. Analyst expectations of Alibaba's earnings for Q1 2023 have been revised down significantly for the last year or so now, so they are basically sitting at rock bottom. So to be fair, it wouldn't be that hard to beat expectations for Alibaba, so there is potential for an upside surprise. The company also still sits at a very good valuation of under 9 forward price to earnings ratio, which is amazing value and prices in no growth. So I'm still bullish on it over the long term. Finally, let's speak about the annual drama of the debt ceiling. It does appear to happen routinely now, and investors usually just kind of ignore it because it usually works out. But Donald Trump was calling for the GOP to ignore bipartisan talks and allow the debt ceiling to be hit earlier this week. But fortunately, cooler heads do appear to be prevailing, and a deal does appear to be in sight. The consequences of a US debt default would be absolutely catastrophic for the global economy because every single financial instrument relies on there being a safe investment to measure against. And right now that's US Treasuries. But most people aren't really paying that much attention to the potential debt default because it's so unlikely. 100% of the time it's never happened before. And there's usually a deal agreed a few days at least before it happens. The brinksmanship may be even worse this year as the negotiators are operating in a toxic political climate adverse to compromise, and on a short deadline, the US could default on its debt as early as next month if no deal is reached. But the Democrats do appear to be fairly positive about negotiations. They're saying that it could plausibly be in place by 2 weeks' time. The White House press secretary said it's been productive, it's been continuing, the conversations are going in the right direction. However, Republicans are a lot more downbeat and skeptical by the sounds. They aren't too positive and have said that the White House has no plan, no proposed savings, and no clue. So You never know, the Dems could just be saying this as a kind of political game to make the Republicans take the blame for any problem. Ultimately though, I do think a deal will be reached and the stock market will be just fine. Next week is a really interesting week with all of the earnings that I mentioned previously, and I hope you guys pay attention just as I will be doing so. If you did enjoy this video, please consider giving me a like and a subscribe, and I'll see you guys next time.